What is good, guys? It's Rey-Jay back with another video. And in this, I want to break down some very important news about the markets. I want to talk about what you should be watching for tomorrow, as we have a very big test coming out for SPY, and also how the market may move moving forward. But before I break anything down about all the data that's coming out, talk about some new news, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. This offer ends in just about 3 days from now, so check it out before they run out. Anyways, let's break down what's going on with the markets. As you guys know, the market was pushing very hard on Friday, continuing to rip to the upside, despite some bearish data coming out from the Michigan Consumer Sentiment Report. But for Monday, we have some data coming out. Basically, we have Cook from the Fed giving a speech. We have some bill auction data, and it's just some minor things coming out. And after the market closed on Friday, this news came out about Moody basically cutting the U.S. outlook to negative. The credit rating is going to stay the same, but this is still not the best of news. This did cause the market to dip a little bit during the after hours. But the question remains, will we continue to fall, or is the market going to do something unexpected? Now, this news is important because it's going to affect the US credit rating, or at least the views of it, because the sentiment right now is going to shift a bit, and there can be more risk when it comes to involving investments in the US and things like that. So the credit rating, the AAA rating we have, is at risk, according to Moody, and they're saying that looking at the current political polarization, the possible substantial effects from a potential government shutdown, and the amount of debts that the U.S. is allocating, this is changing their view of our credit, and that's why they're changing their outlook. So the market was pushing, right? The market pushed so hard on Friday, and then right after the market closed, the news came out, and the market started falling a bit during the after hours. So what do I think this means for the market going forward? And here's my simple answer. The market still has very mixed signals. Market volatility is quite neutral. We also have other indicators which are still a little bit more fearful, but they're becoming closer to neutral, especially on the fear and greed index. So now we're going to be focusing on these different levels. So if you look at SPY, we have this historical resistance from these resistance levels up here, which I drew out, and we came very close to it on Friday. So I think the market's going to likely gap down. I think that's most likely going to be the case. We're going to see the market gap down, but I'm not 100% sure about how this is going to play out, because the market could be very irrational, very crazy sometimes, and that's why you want to be watching these levels for confirmation. So we're going to likely gap down tomorrow. That's most likely going to be the case. I've spoken to some big investors and many very, very experienced traders, and they have different views about what's about to happen. Some think the market could push higher and we're going to continue to break out. Others are saying the market's going to sink back down. Honestly, guys, no one truly knows. So the best thing to do is not pretend we know and just watch for these levels. So when we gap down, we're going to be watching how SPY moves from here. Do we continue to sink? And if we lose this 438 area, we could see this thing start sinking. 438 is going to be a very, very key level. If we lose it, there's going to be a risk of it coming down to 437.5 and then potentially the 436s if we lose this support. We're going to be watching to see if buyers could defend it at these levels. But we're going to be watching for a move down here, basically going into tomorrow. If we do end up getting that little pullback or something like that, I think I kind of overextended this line. It should be ending for Wednesday, and this is the more bearish case once we get this little drop approaching CPI. And then going into the more bullish case, if we gap down and you see something like this where the market drops, but then buyers step in as a couple of hours pass and we start pushing again, you're going to be watching this resistance between 441 and 441.8, depending on where we touch this white trend line. If we break this, if this ends up breaking and we get all the way up to 442 again, that means the squeeze continues and we're going to see 444. So if we reject near this trend line, right, if we kind of gap down and start pushing down, that's going to be the bearish case. If we gap down and see buyers stepping in, watch this resistance. You're going to be watching to see if we could break this resistance. This is going to be very tight. If we kind of fail here, we could shop around, but if we break it, we're going to go all the way up to 444. And that's going to be the more bullish case. So I truly don't know which one it's going to be honest with you. But even if we do push even higher and higher and higher, the thing is, you want to be careful anyways, because the market's going to close on Monday, and then Tuesday morning we have CPI coming out. So if we push up this hot approaching CPI, you want to be very careful. It's not always the best of signs. So expect a gap down. We're going to likely gap down. And then we're going to be watching, can we hold support right here? Does SPY hold 438 or do we break below it? If we lose it, we could turn more bearish. So you want to be watching it very carefully. And I'm not 100% sure how this news could affect the markets. I believe that it's going to cause us to gap down at the very least. But because the market can be so irrational and because of the fact that so many people that I've known have so many different views, I think the best thing to do is just be unbiased and watch it. So watch this big test tomorrow. It's going to be very huge. If SPY breaks this white trend line, if we break above it, we're going to shoot up to 444, then see some tight resistance there. And that's going to be like a pump before CPI on Tuesday. So we'll see what happens after that. If we gap down and we end up failing to fill the gap and push back up, watch 438. If we lose 438, we're going to start sinking lower and we could start testing the 436s again. All right. So I know you guys may not be happy with me kind of like not giving you one specific view or tell you what I'm leaning in. I'm actually 50-50 right now. I know in my videos, I'm going to continue to give you guys predictions and stuff. It's just for this one, I'm quite uncertain about what's about to happen because there are just so many mixed views and the market is just insane. From a technical standpoint, we look bullish on the 4-hour time frame. This market could push higher, but we have a bearish divergence developing at the same time that suggests that the market could form a top soon and still likely going to pull back. So for the people saying that the bearish divergence doesn't matter, there is truth behind that because they don't always play out, but the large majority of the time they do play out. And the thing about this bearish divergence is it's still developing. It hasn't actually completed yet. It's still in the process of developing. If we saw the RSI start shooting up as this shooted up on Friday, we could have invalidated it and this would stop developing. But because it's still developing, that tells us that it's not fully playing out yet. That means the market could go higher, and as long as this bearish divergence remains, there could be a big rejection still coming. So very mixed signals. That tells me that, look, we're going to throw our biases aside. I'm not going to turn too bullish, not too bearish. We're just going to watch it, and we will see how this test emerges. Do we gap down and then bounce and start pushing up to try to break the trend line? If so, we can push higher. If we gap down and start sinking, then it is what it is. Watch support and watch these levels. We'll just have to wait and see and be reactive because this news is very unpredictable and the market is just full of crazy manipulation. Now, for the QQQ, if this thing gaps down, which I think it's going to likely gap down on Monday, we'll be watching to see how it reacts to CPI. Now, right here, this level right here is where we have this 380 zone. Let me actually mark 380 first before anything. It's very important that I mark this before I start drawing out. We're going to gap down, okay? Most likely QQQ is going to gap down. And we're going to be watching, do we come down like this? Do we lose 377? If it loses that support, there is going to be a risk of it getting very close to 376 flat. So this where this wick is right here. We're going to be watching that support, and this is going to be the more bearish case. And if we lose 376, we're going to turn even more bearish. 375, 374 are going to be coming. Those are two supports to watch for. And that's going to be like a drop approaching CPI if we get the gap down and a drop. All right. So if we gap down and we actually see this thing try to break out anyways, because we also have this trend line to be watching for. We have this trend line that it developed from the last resistance. This is basically going to develop into some kind of like back test since we got this like breakout. So with this forming, since we got this breakout on the triple Q, that's a decent sign at least for the bulls so far. So we're going to be watching to see if this is some kind of back test or not. That's why I'm going to break this additional trend line right here. So for now, we're going to be watching if we see a move like this. Do we end up breaking below this trend line right here and to start sinking? Or do we continue to break our high from Friday and then eventually start pushing up to fill not only the gap, but also exceed like 380? So we're going to be watching the other possibility, which would be us kind of like sinking down a little bit, retesting 377, then bouncing to fill this gap. And if we get one more pump approaching CPI, I'd still be very careful approaching CPI. Watch 378 as key resistance to 378.8. If we break that resistance, 380 is on the table. And I think that we could see more upside. So we're going to be watching to see which way this ends up going. This is going to be very interesting to me. And regardless of what happens, don't fully trust this move, okay? We have CPI on Tuesday before the market opens. This could change everything, but it's got to be one of these two. If we continue to break out and we get back above 378 on Monday, it could push higher to 380. If we end up breaking down, watch this test at this trend line in this 376 area. If we lose that, we turn more bearish. We'll have to wait and see. At this point, it's very difficult to predict. But either way, there's still a bearish divergence developing. So that still tells us that there could be downside still coming like much later on. So we're still on a bearish divergence on the triple Q. It could push higher, but there's a risk of some downside maybe by like Tuesday, Wednesday, those later days. So you want to just be very careful. For now, let's not worry about the downside or upside. We're just going to focus on the chart. So on Nvidia, we have this level right here. Basically, on Nvidia, we have 488 to 490, this zone right here as tight resistance. If we gap down on Monday like this, and then we retest this like 480 area, we could see Nvidia drop a little bit after it gaps down. We're going to be watching, do we hold 480? Do we see buyers trying to defend 480 to push it back up? If it does so, watch 485 as resistance. If this breaks, you're going to see this thing push up even higher towards 488 to 490 if we get one final push. If the Moody news is bad enough to cause this thing to drop alongside the market, watch for the gap down and drop. Let's see if we hold 480. If we lose 480, it's going to come back down to 475 to fill some of these imbalances, and we're going to see a little drop right before CPI. So, in my opinion, we have to watch it in real time to see this test. I'm anticipating a small decline that's coming. There's going to be a small decline in the morning, but let's see if we bounce or not. Let's see if the buyers could step in or not. And let's see if this news is enough to cause this to continue to drop. This is quite bearish news technically, but the market could be very irrational and crazy. So watch the test just to be safe. Watch and see if the buyers step in here or not. And then don't forget, guys, we have CPI for Tuesday. For Tesla, we have something very similar developing. On Tesla, we're going to be watching this resistance right here. So we're at resistance at this imbalance right over here at this 215 area. The chart looks bullish from a technical standpoint, so we're going to be watching to see if Tesla ends up trying to push up. Now, Tesla might gap down to 212 on Monday, and we'll see if it breaks 212. If it does so, there's a risk of it coming back down to this like 209 area to retest that area and maybe just chop around like this. That would be the more bearish case, in my opinion, as long as there's no like major bad news. It could try to hold up a bit. And if we gap down and then see buyers stepping in for the markets, you want to see if Tesla could try to get above 215.5 around that resistance. If we break 215.5 going into tomorrow, watch 216.8. That's where we have this imbalance right here. So like right here. And if it breaks 216.8, I think it's going to shoot all the way up to like 220 and then reject like that. That's the more bullish case. So if we break and hold above 216 plus, it's going to push up to 220, in my opinion. If we fail to break that level, and we end up just gapping down and just dropping, if we lose 212, there's going to be a risk of it coming down towards 208. All right, those are two levels to watch for. I'm in the middle. I'm actually 50-50 at this point. From a technical standpoint, it looks like Tesla wants to get up to 220, but just to be safe, we will see how this news affects us and just watch that test. We're going to gap down most likely Monday, and we'll see if we see a bounce or not. So we'll be watching this test very carefully. Now, for Aapl stock, we have something very similar developing. Aapl, if we end up getting another push to the upside, a level I called out would be this tight resistance at, I think it's 188, around this 188 area. That's where we have some very tight resistance to 189. I would say that if Aapl gaps down, which we're likely going to do on Monday, and we just keep shooting up, the market doesn't care about the news, the market remains irrational, right? It's still a possibility. Aapl could make its way up to this like 188 area and just start rejecting up there because we have resistance up there. And this could be like the move, one more push before CPI. If it gaps down and we see Aapl end up failing, you're going to be watching 185 as critical support. We have to hold 185. If we lose it, Apple's going to start sinking. We could get very close to 184 and these lower levels into the 180s. So either way, whether we come up or down, don't focus way too much on the move, because what's going to matter more will be CPI for Tuesday. We'll see if this causes the market to drop or not. But don't forget, there are many ETFs and tickers that have bearish divergences. Even Aapl had one. I think it's trying to invalidate it, but we'll have to wait and see on Monday. With this bearish divergence on Aapl, we will see if we end up getting a rejection soon or not. The divergences have not played out yet, okay? And the thing is, they're still developing. So they're not invalidated. If they're invalidated, then they're rejected. We're not going to likely see them play out. But right now, they have not been invalidated. They're still valid, okay? They're still valid, which means that there's still a risk of some big rejection very soon, maybe after CPI. All right, so make sure you're prepared for that. Now, I just want to briefly talk about a couple of other tickers. I wanted to mention that SoFi, I know this got some attention from a lot of others, is looking bullish. It looks like it wants to push up to 7.15, the 20 EMA right here. Watch this imbalance. I think it's going to come up to 7.15 from a technical standpoint. But if you're bearish, you could also interpret this as a flag. So if it loses, it's going to come back down to 6.5. In my opinion, I'm dead in the middle right now. It could go up higher from a technical standpoint, but the bears could still step in because of what we're seeing with the news. So either way, it depends on the market. If this thing tries to push up higher, we'll see what happens after CPI, but it looks like it might try to make its way up to about 7.13. At least that's a little bit more likely looking at technicals. But just to be safe, we'll have to wait and see. Now for the IWM, this could be forming. It still looks a little bit more bearish on the 4-hour, but it's trying to flip. It's going to gap down towards 168 or so. If we're bullish, you want to see it get back above 170. If it does so, you're going to be watching for a move to 172, then a rejection off the 200 EMA. If you're bearish, you want to see it lose support right here at 168 and start sinking down to 166. If it loses 168, you're bearish. If it manages to bounce and break 170, you're bullish. All right. For Microsoft, it's continuing to rip to the upside. It still has this bearish divergence, however, which tells us that there could be a rejection soon, but there's no confirmation yet as we're about to get a bullish cross on the PPO. If it keeps pushing, we could be pushing for about 372.5 if it breaks 370. If it rejects from here, you're going to be watching this previous support at 368.5. If we lose that, watch for 366. Because of the bearish divergence, there's going to be a risk of downside. It might pop a little bit more than drop or drop from here. That's very probable for Microsoft. I'm anticipating some downside soon. However, for AMD, there's a bearish divergence still developing on the chart, but it hasn't played out just yet. If we're bullish, you want to see it try to break this resistance around 120. If it gets above 120, guys, it's going to be pushing up to these higher levels way, way, way back here, the ones we saw to this historical resistance. So 120 is going to be resistance. If we break this, you're going to be watching for 122. If we reject off this 120 range, you're going to be watching for a pullback back down towards this 117.5 area. So if we lose 117.5, it's going to start sinking down and start filling this imbalance. There's going to be a risk of 114. We're going to be watching to see if we get that rejection, if we lose 117.5 or if we push above 120. It all depends on the news. The news is a little tricky to predict, which is why I'm kind of going both ways. For the VIX, I do want to call out that we have a bullish divergence still developing. It hasn't fully played out yet, and the VIX looks like it's trying to bounce soon. Now, the VIX could drop a little bit more, but as long as this bullish divergence remains, it could still bounce. We could still see the VIX bounce maybe after CPI or in the future, which suggests that there could be a pullback coming to the market soon that causes this. The SQQQ, it looks bearish right now. It looks bearish. It turns out it ended up flipping. And if this bullish divergence remains, then it could still flip, but for now it still looks like it might sink a bit. So we're going to be very open-minded nonetheless. The dollar rejected off 106. We'll see if this could break or not. If it gets above 106, it's going to turn bullish, which would be bearish for the markets. If it rejects again, the market's going to have a little bit more room for upside. For Coinbase, we're continuing to hold up, and we're starting to look a little bit more bearish on the chart. It looks like it might retest 90.78. If we lose that, watch for a test of 88. For Google, right here, Google is currently up 1.8%. We have a bearish divergence developing on the charts on Google, and we have this attempt to bounce off this accumulation. So I'm thinking that we're going to be testing this resistance. We're going to be watching for tight resistance at 135.6. If we break that resistance, it could get very close to about 140, then reject. If we fail to get above 136, watch for rejection very close to right here. So you want to get above 136 to turn more bullish. If it fails to do so, if it hits like 135 and rejects, watch support at 133. If we lose that, watch 132.5. There's a bearish divergence, which suggests that it's likely going to pop one more time and then eventually sell off a bit, or it could sell off from here. So just watch it very carefully. There's going to be a risk of some downside very soon. For Amazon, we have a bearish divergence. If it pops a little bit higher, we could be watching resistance at 145 and then a rejection. That's where you have historical resistance, or it could just reject from here already. So we'll be watching to see if we get some kind of rejection. It's going to retest 142.5. If we lose it, it's going to sink toward the very low 140s. If it holds this, it could bounce. So we're going to be watching that carefully. For Meta, we're going to be watching, another bearish divergence up here. If we end up breaking above this, if we break 330, it has the potential to go up to 330.62. All the way up here, we have to try to break 328. So watch resistance at 330. It looks like it might go a little higher to test 330 and then reject, but we're very close to some key resistance, so I'm anticipating a rejection. Maybe it pops a little bit more than rejects, or it rejects from here, so I think 325 can be tested. All right, guys, so some tickers look like they have some downside coming. Others look like they could pump a little bit more and then see downside. The best thing to do is watch your levels. Okay, we're just going to watch our levels. There's so much confusion right now about where the market's going. Some people are saying it's so bullish, we're going to keep ripping. Others say that the market's going to be bearish, we're going to get a big rejection. I would say that, look, okay, no one knows at this point. It's very tricky. I don't know if the market's going to be irrational like what we saw on Friday again. I don't know if they're going to try to trap us. I expect and anticipate the market's going to gap down, but we're going to be watching to see if we lose support. If we lose particular supports, expect more downside. If we bounce off support, we could get one more push going into CPI, and CPI could change everything. I know I don't typically make videos like this, guys. Typically, I try to give you guys like one prediction, but this time around, it is very difficult to predict exactly what's about to happen. That's just my honest view, and I just want to let you know I don't truly know what's going to happen tomorrow. Okay, that's my honest opinion. I don't truly know. I'm going to be patient. I'm just going to be honest with you all. So for just this video, I'm not going to give you guys any like specific predictions. I technically gave you some predictions based off like both sides, but we're just going to wait and see, and we're just going to be patient, and we'll see what happens with this new news coming out. Don't forget we have CPI coming out for Tuesday. That's going to change a lot of what's happening. So be patient, guys. Watch both sides, be open-minded, and I'll see you guys in the next one. Thank you all so much for listening. Have a great day, and I'll see you guys very soon. Thank you, and peace out.